All right, back to work. Back to work. Weekend is over. Let's make some money this week. Boy, markets are choppy, sideways, range bound. We got CPI report coming out on Wednesday morning. No surprise there. I love range bound marks. You guys know me in these videos. I love sideways ranges. They're one of the easiest types of markets to make money with. I have two, I think, pretty easy clues telling us where the winning trades are going to be for tomorrow. By the time we're done this video tonight, you'll have a roadmap to make some money on Tuesday. Before we jump in, though, and talk my favorite trades for Tuesday, make sure you subscribe to our channel. I don't want you to miss tomorrow night's video, so make sure you subscribe. And if you like these lessons, if you enjoy these videos, hit that like button for me. Give me a shout out. Say hello in the comment section below. Thank you so much either way for tuning in and supporting the channel. But enough of the intro, though. Let's go make some money on Tuesday. Charts are all ready to go. You can see Nasdaq triple Qs are ready, though the E-mini and the SPY is ready. I have two really, I think, pretty obvious clues that are telling me where the winning trades are going to be for tomorrow. One of those big clues is right on this 60-minute chart right in front of us. That big move down last Thursday afternoon before that non-farm payroll report came out on Friday morning. Now, this is a really important clue because anytime we have a strong move in one direction, especially on the 60-minute or the hourly time frames, we always expect a pullback and a retest of that low. So both the S&P and Nasdaq, we're still bullish overall, but this strong move down from last Thursday night, it opens the door wide open right now for the sellers. And so we know bears right now have one thing on their mind. The bears want to retest that big low from late last week, but that's only one of the big clues in the charts. There's actually one, I think, even more important clue that might not make it as easy for those sellers, those bears, to get what they want for tomorrow. We'll talk about that second, even more important clue here in a moment. Before we do that, though, let's check our schedule for tomorrow. Tomorrow, of course, is a Tuesday. There's no major news on our radar for tomorrow, but I do want to remind everybody, think what happened last Thursday afternoon, that big sell-off, right? That big liquidation sell-off ahead of the non-farm payroll report that came out on Friday. Tomorrow, let's be careful tomorrow afternoon because, of course, Wednesday morning, we have the big CPI report, which is arguably just as important, if not more important, than non-farm payrolls we saw last Friday. And we know that Wednesday morning, if that CPI number comes out higher than they're expecting, that might put the nail in the coffin for rate cuts at all this year. Well, we thought we'd get a number of rate cuts this year at the beginning of the year, but now with strong economic data, inflation doesn't seem to be going away. So all this leads up into Wednesday. The most important thing for tomorrow, though, is it's a wide open day, but please be careful late in the session tomorrow afternoon. Look back at last Thursday. We saw that big sell-off, that liquidation sell-off, which eventually rallied into Friday, but still we have to be prepared for some risk-off sentiment as going to the end of the day here for tomorrow. Now, let's get back to our charts, though. The money is made on the charts. Let's now talk my favorite trades here for tomorrow. Now, we talked about in the 60-minute time frame, we talked about that strong run down. Anytime we see a strong move in one direction, expecting a pullback and a retest of that low, that's one important clue, but it's equally as important as one more big clue we see right now on this tick chart. Now, tick charts make everything easier. We don't trade with time charts in our trade room. This, of course, is a 7,000 tick chart. You see linked up there in the upper left-hand corner. And if you're watching for the first time right now, welcome to the channel. That is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week in our trade room at 8 o'clock Eastern time. There's one more, I think, almost more important clue here on this tick chart, and that is this bullish move up into a trading range. Now, it's no surprise, ahead of that big CPI report coming out on Wednesday, it's no surprise markets are treading water here right now and a bit choppy. As I mentioned earlier, I love range-bound markets. We talk a lot about ranges in our free video classes. The most important thing you want to understand about ranges is that ranges act like magnets, and they like to rotate down, up, down, up, down, up. All right. So knowing that this is a bullish market into a trading range, that means there's plenty of ways for bear traps underneath that trading range as those bears try to take out that big strong move. I like the idea of bear traps underneath that trading range. And then above the range, there are ways to trade both sides of this above the range. For example, wheel ranges, they love to rotate and then break out and pull back. I love the idea of a breakout pullback. Now, there are 3 different types of entry patterns to look for on a breakout pullback. We'll talk about that, of course, in more detail as we go deeper into the video. You'll definitely want to stick around to watch that. And of course, right, because this is a bear strong move down, I have a couple fake out breakouts. I would love to get some fake out breakouts. I think that could be one of the most lucrative trades of the day tomorrow and possibly the week here. Because again, the bears have all of that momentum. If we understand that ranges like to rotate back and forth, I think there's great ways to trap in the bulls up here. I have 2 very specific types of bull trap patterns or fake out breakout patterns above those highs. We'll talk about how to trade the fake out breakout short. We'll also talk about how you know the difference of when it becomes a breakout pullback. We'll talk about that here in a moment. So you'll definitely want to watch the entire video tonight to cover all the bases for Tuesday. First though, why don't we talk about that move going lower, and then later on in the lesson, we'll talk about the breakouts going higher, how to buy it, and of course, how to sell it. So if I get that move going lower, remember, ranges act like magnets and they want to rotate back and forth. But we also know, too, we had that strong run down, right? So these bears, if we go lower here, they're going to try to run this thing back down to retest the low. I don't like the idea personally of selling below a bullish trading range. You're asking for a bear trap down there. And speaking of bear trap, that's exactly what I'd like to look for if we go lower. Now, you know me, right? I'm not in the business of picking tops and picking bottoms. So I want to get underneath this trading range, but I don't know how far it will go. It may keep going back down to retest that low. What I will do though is if I can get some rookies coming in and trying once to keep it going lower, trying twice to keep it going lower. See, now I know where their stops are. I'm going to use their stops to fuel that move back up into that trading range with what I call a failure pattern. Be a 2-try failure. Let me teach in our free video classes, right? 1 try, 2 try, run those stops. Now, as we go higher, we know the market wants to rotate, right, back and forth, usually roughly about the amount below as the amount we go above. So we know where the market wants to go. At that point, I'm looking for a technical bear trap pattern that's a higher high in price and a move right below a prior swing. So this is kind of the recipe for finding good entries below a bull market into a trading range. I'm going to use that failure pattern we talk about so much in the free video courses. Again, into support levels, trap those bears who are trying to short this back to that low. It's a good idea, but again, not below a bull range like that, right? I can't short that below a bull range. Bears try once, bears try twice, then as it runs higher, think about that higher high in price, and I want that bear trap pattern, right? That strong green candle closing above the 21 EMA, just below that prior swing. A failure into pullback combination. Now, be aware of this. Sometimes we get 2 bites of this apple. Sometimes we'll get that strong run down. We'll get our bears once, bears twice, get up going higher here. But because we're bearish here with that strong move, the bears may come in and they may hold the underbelly of that trading range. I always try to take profit at the underbelly of the range because of this scenario. Sometimes that move down is so strong, it'll hold the underbelly and run back down to retest that low. Now, these oftentimes will hold off of that double bottom. Sometimes they become measured moves, right? The breakout leg, the measuring leg, right? So think about that area, but once they get back to retest the low, or once they finish off a measured move somewhere down around there, do it again, right? Do it again. again, that range is still a magnet. So once I make that run back down again, don't try to pick the bottom, right? That's always kind of a rookie mistake. Very difficult to consistently pick tops and bottoms. I would much rather tomorrow wait for the bears again to sell once, sell twice. Now again, this is a horrible spot to be selling short. Whatever you think about that strong move down, whether or not you think this is a bear market overall or not right now, this is a horrible spot to sell short. Anyone who sells short on the breakout pullback, which is not a bad spot to sell, they're taking their profit at that low. So while the professionals are getting out of their shorts, the rookies now get in. Again, think about that failure into that trap pattern running high. Remember, trap patterns are pretty simple, right? Traps are get above the moving average, higher high in price, go right below that prior swing, and that will be, again, a bear trap. We teach it in our free video courses. So don't be surprised if we get that two-try failure. We run back up. We take some profit in the trade, but then again, they hold, they retest it again. Think about that measured move area down there, right? Measured move, that retest of that low, somewhere down around that area, we call those double bottom reversals. These oftentimes are more lucrative the second time around, that failure into that, again, into that bear trap pattern, going higher here. Now, let's slow down for a second, because I know most of you guys and gals watching right now, you've taken my free video classes, you've learned about failures, you know why I love traps so much, you're making money of this stuff out there on your own. But if you're watching right now for the first time tonight, this might be a brand new language for you. But don't you worry, I teach all these entry patterns, failures, traps, and a whole lot more. I have hundreds of examples of real setups on real charts. I teach all this in a lot more detail in our free video classes. I'll put a link up top here for you. Don't you worry. Hit that link that popped up there for me and take that free trading course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room to know exactly where the winning trades are going to be each day. Then I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns, help kickstart you making money out there. If you're not making consistent money each week, if you're missing the best trades every day, if you're struggling to qualify for a funded account at Apex or Top Step, hit the link up top there. Take that free trading course. It's perfect for someone trying to make the jump into full-time trading. Give you an easy roadmap to follow so you always know where the best winners are going to be each day. Also be aware too, all the important links we talk about tonight, I'll put in the description of the YouTube video. In the description, you'll find the free class links, our trade room membership links down there as well. Every morning, 8 o'clock each time, we trade together. And also too, I'm on Twitter, posting updates throughout the day. If you're on Twitter or X, give me a follow. All the details in the description of the YouTube video, but that will give you a roadmap to follow, right? A lot more examples of things like failures, traps, double bottom reversals that make a lot more sense as a good comparison or companion with this video. Now, before we talk about going higher here, because again, I want to talk about going higher. This breakout pullbacks going higher, and again, some nice juicy bull traps going higher as well. We'll talk about that more in a moment. Before we do that though, let's talk about some variations of this, right? Because we mentioned earlier, I love the idea of running lower. I love the idea of, not picking the bottom on this, right? But trapping in the bears, use those failure patterns, right? And buy into stops. I love that idea. However, sometimes we don't get that set up, right? I wish we always did. I wish it was that easy, but it's not that easy. Sometimes there's so many buyers down here, it'll run lower and pop right back up. These can be a bit tricky, right? What happens in these V bottoms like this is they oftentimes will run lower, and for whatever reason, right, it'll just boing right back up. And what happens is it will begin to grind going higher. Okay, the grind is the gift and the curse, right? I say that because when it begins to grind going higher, if you're anything like me, that voice in your head will start saying, come on, man, get in. You're missing this move. When it grinds higher, it's going to take discipline not to chase it going higher. The reality, though, is the good part about the grind is that once we have that grind going higher like that, we can now draw a trend line off those highs. We can bring it down off that low. That creates a channel. Now remember, ranges, they want to rotate back and forth. So there's money to make buying that first test off the low of that channel. Now, my favorite entry is always a trap. So it's right below a prior swing, right? It's always my favorite entry is always a trap. It doesn't need to be a trap though. It could be a failure pattern, right? Get below the moving average 21 EMA and bears come in and short that sucker, right? If they get short, I can use now a failure. A failure turns into a pullback combination, right? So you'll learn more about these entry patterns, of course, in the free video classes. But the key right now, though, is if we don't get that kind of failure pattern down there, if we can't trap the bears in and squeeze their stops, we don't want to make the situation more difficult by chasing after it going higher. The problem is you chase after things going higher, eventually get the pullback, you'll miss the best entry. So don't miss the better entry. You want that first test. That first test is the best test. Could be a trap pattern, could be a failure pattern, could be a pullback combo, it could be a strength trade. That'll make a lot more sense, of course, inside the free video class. And again, we know the market wants to rotate, so we know where to take some profit off at that high. We know where to leave a runner, right, for that pendulum swing going back higher here. That is one more variation. Let's talk two more quickly here. We'll jump to the Nasdaq and talk about price going higher here. First of all, is a shallow pullback trap. A shallow pullback trap. I want to get that deep pullback, trap those bears in, and run higher. If I can do that, I can take a small amount of risk for a much larger amount of reward, right? Risk reward looks great on that. And when risk reward looks great, a lot of other people will agree and they will take that trade with me. Therefore, the self-fulfilling prophecy helps me make money in a situation like this. But now think about this. What if we ran lower, we snap right back up, and now we go one try, two try like this? It's the same exact pattern, right? It's still bears trying once, bears trying twice, but now think about that risk reward equation. If I buy here now my risk is there. My reward is like that, right? Yeah, see, that's not going to be very attractive to other serious traders. Experienced traders are not going to take that trade. That risk reward ratio is now out of balance. We don't want that trade. How do we work around that? We work around that by using trap entries. This is very important, so you want to pay attention. As we run lower, again, 1, 2, great spot for a good risk reward. But if it runs up, pops back up again, 1, 2, yeah, see, now not that good. This is where we have to get that trap entry, get in below a prior swing, then go higher. Again, it's that bull trap pattern, or excuse me, that bear trap pattern we talked about a moment ago, right? It's a higher high in price and a trap below that low. Now think about that risk reward ratio. My risk is here now. My reward now is up here. That is something I can get excited about. So before you take your next trade every day, right, think about what's my risk if I'm wrong, what's my reward if I'm right, and think about how to get that risk reward. Look at something like this. I want to risk small and earn right much larger. So it's the same basic idea, right? It's to move lower, trap the bears in, but the higher up we are, the more important it is to buy as low as we can. And this one entry pattern we do that with, and that of course is a bear trap. Bears once, bears twice. Nice strong signal candle. You'll see examples of that inside of the free video course. And then last variation of this, if we were to get a very strong sell-off tomorrow, we know the bears want to go back in and retest that low. If it sells off and takes out that low, the amount of strength required to do that is going to want to pull back and retest. Knowing that that will be such a strong move down like this, what I will look for that bear trap. If we do end up running lower, I'm going to look for bears once, bears twice, I need to get long as low as I possibly can with a bear trap pattern. Why as low as I can? Because I don't want to buy it as it goes higher here, because who's waiting up there? Bears are waiting at the underbelly of that range. They're going to want to retest that low. I don't want to buy as we go higher. So one small kind of variation of this, if it really crushes it and runs lower, I can buy off that low. I definitely can, because it'd be a good spot for profit taking, right? Bears who sold short above the highs there, but I can't buy it going higher. I need to buy as low as I can, because as we go higher with that much strength going lower, you have to assume the bears will come in, whack this thing, and try to retest that low. At that point now I can use that double bottom reversal pattern we mentioned a few moments ago earlier on in this video. So we'll talk about more about that tomorrow in the trade room. We'll know more about this tomorrow, of course, once we see more information. But that's the game plan, though, for me as we go lower, and some variations of that for you as well. Now let's talk about going higher, right? I've been making you guys wait for this all video here so far. Let's get into it here then. Get the Nasdaq going. Nasdaq is in a pretty ugly market right now. You can definitely tell the markets are waiting for more clarity from Jay Powell in the Fed. Like I mentioned in the introduction, we're still we're still pretty bullish overall, right? No doubt about that. We're still bullish here overall on the 60-minute time frame. But again, you cannot ignore that strong rundown that we saw on Thursday afternoon, last Thursday. They're going to want to try to retest that low. That part is the same thing as it was on the S&P, and just like on the S&P, we now drill down to a 4,000 tick chart, bit faster time frame, because the volume is much lower in the Nasdaq. Now we drill down, and here is our bull market, into our trading range. Now again, ranges love to rotate back and forth. I gave you guys plenty of different ways to buy below that low, some variations of it to get risk reward in the right location. So that should take care of us still on the NQ. I love that previous range and that breakout pullback area right around that pendulum swing. That looks to be a great spot for one of those bear trap patterns I mentioned a moment ago. But again, as we go higher here, if we can get, because again, we're an overall bull market still barely right now, right? We're barely still an overall bull market. If they wouldn't have popped back up into a range like this, I would be saying we're a bear market overall right now. But it's tough to call this a bear market overall when that big sell-off before non-farm payrolls rebounded so well into a trading range. And again, it's very difficult to want to sell as we go lower. Please be very careful selling if we go lower, because that range above us acts like a magnet. I have a couple ways on trade going higher. I want to buy a breakout pullback, right? Buy a breakout pullback, okay? That's one way to do it. But again, with that strong move down from last Thursday, I like the idea of a failure, right? Basically a head fake, a fake out breakout, right above that high. All of these, for the most part, are fake out breakouts, right? Fake out breakout down there, fake out breakout above that high. Now, let's talk about a breakout pullback. So when it comes to breakout pullbacks, there's one thing that kind of always comes to mind. So first of all, if we do see this thing break out and begin to rip running higher, there's one pattern we look for on the way higher. It's always going to be a bear trap pattern. So if we start seeing this thing really push through, if we see a convincing break above that high, if it blasts up and rips right through that high, again, overall bullish into a trading range. I like the idea of that higher high in price. See that? Higher high in price and a move right below that prior low. This will almost always look like this, right? It'll barely pull back the 21 moving average. It'll be a higher high in price, and you'll get the move right below that low. We see these all the time in a bull market, especially in a breakout. Now, one thing about these breakouts is usually the breakout leg is the measuring leg. Okay, that will tell you kind of where this thing wants to go. We saw a range back here, for example, breakout leg, right? Measuring leg, right? Makes sense. So breakout leg, measuring leg is very, very common in range breakouts. So that will tell you kind of where the market wants to go. Again, this is a bear trap pattern as long as we see a good clean break, right, of that high. Now, eventually I don't want to buy too high, right? If we get that move going higher, we get that measured move, I don't want to buy high, right? At this point, it's too high. It's too high to buy, right? But now we know we can now use that range now for a breakout pullback. Now, when I think breakout pullback, the first thing that comes to mind is a two-legged pullback. Now, what's a two-legged pullback? Now, two-legged pullbacks are my favorite technique whenever I don't want to buy really high. Okay, when I think two-legged pullback, I think about a measured move. Now, what's a measured move? A measured move, you guys are learning this, of course, in the free video course, right? Measured moves are symmetry, right? They're A, B, C, D. When I think about a breakout pullback, I think about a two-legged pullback. When I think two-legged pullbacks, I think about symmetry. And usually it'll go a little bit more than a measured move. Okay, get underneath the moving average, one leg, two leg, a bit further than a measured move. All right? I don't have a crystal ball. I don't know what exactly it looks like for tomorrow, but that's the basic fundamentals of what I want to use for a breakout pullback. Right? Makes sense? Now, at this point, those prior highs, right, which were resistance, they now become support. I'm not going to blindly buy those prior highs. What I'll do is I'm going to wait for that price to pull back to that moving average and use that same failure into bear trap pattern we mentioned before, right? That same two-try failure into that bear trap going higher. All right, we mentioned that earlier on the S&P. So think about this scenario for a breakout pullback. Again, it's bear traps on the way up. Think about where that measured move is. The breakout leg is the measuring leg. That's where targets go. Once we get to that point overhead, we don't buy anymore, right? We're too high now. We then look to buy low. When I think about buying low, I think about buying a two-legged pullback, a bit more than a measured move. And I have no crystal ball. I don't know. This may roll all the way back down into that trading range, which we're going to cover here in a moment. Once I see those bears, though, trying a couple times, I can use that failure pattern right into that bear trap pattern going higher. And one cool thing about this is markets are fractal, right? So this becomes one big leg there, and that becomes a big measured move leg right there. Same idea, right? The breakout leg is the measuring leg to leave your targets. That's the game plan I use when it comes to a breakout pullback. Now let's talk about the fake out breakout. There are two types of fake out breakouts you want to look for. One is called a crown reversal pattern. There's one right there from late yesterday or late Friday afternoon, right? Or excuse me, late Friday morning. It looks like this. It goes up. Remember, this is not a great spot to be buying up there, right? We don't want to buy. Remember, ranges act like magnets. And so if I'm at the previous high, at a triangle high, I do not want to buy right there. Again, if we rip right through it, yes, I can then look for a bear trap going through it. But I'm not in the business of trying to pick up a breakout on this. So I'm not going to buy that pullback. It's not a very good trade up there, right? The location is the bad part. But if I start seeing buyers try once to keep it going, if we go lower and buyers try twice to keep it going, yeah, now we have what's called, it's basically a bull trap pattern, right? It's one right there, right? Went up, buyers once, buyers twice, bull trap, back down again. Lower low in price, right? Buyers want to buy once, they go lower, they buy twice. And again, I want that bull trap pattern, that nice strong red candle closing firmly below that 21 EMA. That is what I call a crown reversal. It's basically a bull trap to trap those buyers. Remember, it's bullish in the short term. I can't simply just sell that top. I mean, you can if you want to, right? You can try to sell a top if you want to. It's just difficult to pick tops and bottoms consistently. You know, every once in a while, sure, but every day it's very difficult. So I would rather trap the buyers in up there, let those rookie buyers commit. Then I know exactly where their pain is. Then I can sell into those stop losses, right? Which is my favorite way to make money in the markets, to ride this thing back down again, right? Mark off the high, mark off the low, and that may end up putting us down here to that bear trap we discussed earlier here in the video, all right? That crown reversal is an easy way to short off that top. Now, sometimes we don't get that though. Sometimes all we get is a V-top, right? We'll run up and we'll get smacked right back down again. These are not my favorite, but my job right now is to make sure we are mentally and technically ready for no matter what the market throws at us here tomorrow. If we roll up and get smacked back down again, it will turn into that grinder, right, going lower. And again, when you see it grind down like that, what if you do not chase it, right, going lower? Mark that low, mark that high, look left, as we always say, which basically means look at these prior swings. What you want is my favorite trade is always that first test off the high of that channel. Right, the channel drawing those lows, up around those highs, it's the first test. And this could be a bull trap, like I'm showing you here. It could be a buyer failure pattern, a pullback combo, a strength trade going lower. And again, the market wants to rotate back other side of that trading range. So keep an eye out for those two types of kind of head fakes or those fake out breakouts above that high. If it pops, two-legged pullback and go, right? If it pops but struggles, right? Yeah, now we know that short back down into that trading range and pick it up down here, right? And buy it right back up again. All right, I'm getting excited now just talking about this stuff here with you guys on this video, but that's the game plan for tomorrow. Now, don't forget, tomorrow morning, the easiest way to start making consistent money in the markets is to learn and trade along with me every morning, 8 o'clock Eastern time. Come do it with us. I'll put all the important links tonight, the description of the YouTube video, put the free class links down there. Definitely start with the free courses if you're here for the first time together. Then you can upgrade to our membership classes, and hopefully I'll see you sometime soon trading with me in the morning room at 8 o'clock Eastern time. All right, guys, fantastic day today. A great start to the week this week. Let's make some more money tomorrow. Hopefully the game plan makes some sense. Hopefully you use this knowledge to make a bunch tomorrow, and hopefully I'll see you back here same time, same place tomorrow night. Get ready for CPI Wednesday. In the meantime, be well, be nice to each other out there, and be here next time. Adios, amigos. Bye for now.